Hi, this is Scott Hamilton from InKnowVision. Thanks for watching this webcast. This is one in a series of short videos on captive insurance companies, and you can view more of these videos by going to YouTube and searching for InKnowVision Captives, or you can go to our website, which is listed at the bottom of the page here at innovation.com. These videos are educational and are not designed to be tax advice. Please be sure to read the disclaimer on the last page for more information. If you have any questions or would like to explore next steps with regard to a captive, feel free to contact us. Our phone number and email are listed on this slide and will also be listed on the last slide of this presentation. Today we're going to be talking about how much money do you have to put into a captive insurance company in order to make it work. Now this is technically called capitalizing the insurance company, and it's really just thinking the same sort of thing as any business. When you start it up, you're going to start it up with some money and probably some sweat equity, but the money that you put in is your capitalization. Now when you start out your own business, of course, you can start out by starting with almost nothing. In the insurance world, because you're subject to governmental regulations, almost every jurisdiction will have a minimum capitalization required in order to get the insurance company up and running. We've given you some ideas of what different jurisdictions require, and there's two different ways of looking at this. One is what is actually required by the law of the jurisdiction where your captive is located. And the second thing that we have to be looking at is what's a reasonable amount of capitalization for the risk that the company is taking on. And probably from the sounds of that, you would get the idea that the more risk the company takes on, the more likely that the capitalization required to cover that kind of a risk is going to be higher. And that's typically true. But let's take a look at some statutory, some law requirements. This is if you start a captive, for example, down in the left-hand corner in the country of Anguilla or the country of Nevis, your capitalization is pretty low. Anguilla, I think the dot doesn't show it, but I believe it's 13,000 in Anguilla, and in Nevis it's about 32,000, 33,000. That's again your minimum capitalization. In all likelihood, if you're using your own captive, your capitalization is going to be higher than the minimum. Now that's true in those jurisdictions. If you get over to Cayman, Nevada, you start to edge up over 100,000. Nevada's at 200,000. Vermont and Delaware are at 250,000. You can again have a great deal of choice in where you're going to locate your captive. If your actuary, the actuary that we use, tells us that capitalization for the amount of risk being taken on should be about $100,000, then we could look to Anguilla, to Nevis, and to Cayman as jurisdictions that would make sense, so that we don't have to put more money and tie more money up in a company than we need to. If you wanted to have a captive formed in Nevada or Vermont or Delaware, well, you would just have to have more money tied up to do that. This is totally up to you in terms of what you're trying to accomplish. Now, these are capital requirements for standalone captives. There are also capital requirements for cell captives or for Delaware Series LLC captives. And typically what happens in those cases is that whoever forms the captive, and that's usually the captive manager, also puts up the capitalization. And there has been quite a bit of discussion over the last year or two in the industry as to how much capitalization each series needs to put up, or each cell needs to put up. And of course we're gonna have to look to the captive managers and to the lawyers for advice on that. But the capitalization tends to be much lower in a series LLC or a cell type captive, and premiums tend to be lower too. Costs tend to be higher. Other costs tend to be higher as a percentage basis. So when we're working with clients, what we're doing is we're trying to figure out what is the best type of captive for this particular client, for the amount of premium, for the sort of the the efficiency from an economic and a tax point of view, and also where, if possible, should we locate the captive in order to make sure that we keep our capital in our business where it's making money, and not so much in our captive where it's really a static asset and it's not really doing much for us other than meeting whatever the minimum requirements are for capitalization. Now, I've mentioned that in addition to the statutory requirement, then you've also got to meet a couple of other requirements which are not stated so explicitly as they are for capitalization under various countries or state laws. And one we've talked about, which is this bullet on the left, the amounts of coverages and premiums. As I mentioned earlier, the more risk you have, then the higher capitalization requirement you're going to have. So if you're writing many millions of dollars worth of risk, your capitalization might be $500,000. If you're going to write $1 million worth of risk, your capitalization might be 100,000 or 150,000. That's largely up to the actuary who's going to help us design the capitalization requirement so that it's a reasonable amount of capital. We don't want too much, obviously, but we've still got to have a reasonable amount. The other thing is capitalization can change based on a history of claims. So clearly, if you're just starting your captive at the beginning, then you don't have any you don't have any history of claims. Although if we're taking over coverage from a third-party carrier that you've been using for some period of time, there may be a history of claims, and if obviously the better the history of claims, in other words, the lower the amount of claims that you've made, the better in terms of capitalization. If you have a history of high claims, then it's likely that you're going to be required to have greater capitalization. As I mentioned, the key here is to work with us, work with the consultants, the captive managers, in order to figure out a good balance so that you can keep most of your free cash in your operating business working for you, and just the least amount required in order to meet the various requirements of capitalization so that your captive is legitimate. If you have any questions, we'd love to have a discussion with you or try and answer some of those questions. Feel free to give us a call at the number here, email me, or visit us on YouTube if you'd like to read some more or watch some more videos. All those things are things that we'd love to have you do. So again, look forward to having a conversation. Thanks very much for watching. Appreciate your time.